Hey everybody, my name is Brandon from StockStreams.com, and today I want to talk about the crypto crash where Bitcoin, Ethereum, and Dogecoin has lost more than 20% of its value in 24 hours. So now let's get started. So here we are on Google, and here's a one-day look at Bitcoin, a one-day look at Ethereum, and a one-day look at Dogecoin. As we can see, we are all very red today. In some cases for Ethereum and Dogecoin, we were down about 40 to 50% from highs to lows. So of course the question is why? And if we look down at some of the news here, we can see that a lot of people are talking about these comments that the People's Bank of China made on their WeChat account last night. We can see that for a while now, China has been against cryptos. So honestly, in the past, China's stance was not that blurry at all. China was pretty clear that the government did not and would not like cryptocurrencies at all. The reason for this is because of some control concerns, and also because China is probably developing their own digital currencies. Again, this is not a political show, and you may think that this is a good idea or a bad idea, but the fact of the matter is that it will likely happen, and the statement from the People's Bank of China kind of reaffirms and increases the probability that China will be coming out with a digital currency. And this, combined with some headlines the past few days about Elon Musk's sudden realization of environmental factors for Bitcoin and some of Dave Portnoy's comments, had a multiplicative effect to the downside for cryptos. So there are really two ways to look at the situation here, a bull case and a bear case for crypto. Let's start off with the bear case first, and that would be that in an instant, the governments of the world could outlaw cryptocurrencies, and that would render them absolutely useless and worthless. Again, because crypto does not have intrinsic value. Because the governments can outlaw crypto, what that means is that their people or their institutions cannot legally hold or transact crypto. This is especially a bear case if you consider that about 20% of the entire world's population lives within Chinese borders, so immediately 20% of the world would not be able to transact crypto legally, and that could shift the balance of buyers and sellers to the downside. Also, the bear case is that the thinking that China is just the first of many countries that will take a negative stance against crypto. If more countries take a negative stance, and honestly to me, it is likely that more countries will be negative to crypto, then that just continues to cut the total addressable market of crypto down and down. The United States themselves, particularly the Treasury Secretary Janet Yellen, has been negative about cryptos. If the United States takes a negative stance, then I think cryptos are in very big trouble. But I do not think that this is the case, and this brings us to the bull case for the news here. Bitcoin and the other cryptos have come a very long way in just a few years, and the approval for Coinbase to be a public company in the United States actually says a lot about the regulatory environment and is part of the bull case here. Because Coinbase was allowed to go public, and because other public companies like Tesla and Square are allowed to hold crypto on their balance sheets, this quote-unquote legitimizes cryptos in the United States. The adoption of institutional investors was the main thesis for crypto's bull case, and I still see that intact for the long term. I do think that a lot of people will continue to at least have a small exposure to cryptos. And if everybody has a small exposure to crypto, then the price of cryptos will likely go higher. Another bull case is that there are actually use cases for the blockchain technology, particularly the Ethereum blockchain technology. With the rise of NFTs, I suspect that years from now, Ethereum will grow in popularity and therefore grow in price. NFTs have extremely beneficial use cases and are actually a very interesting technology that can change a lot of the things in the world. So I do think that this alone gives crypto some floor to their price. The last bull case that I want to talk about, and is actually the main point of the video here, may be a little bit controversial. I want to go back to the point I made about China potentially outlawing cryptos. I'm not talking about China or crypto specifically from now on, but when a government power outlaws something, there will always be a side door to the goods, and the price of those illegal goods now goes up. Think about prohibition in the United States in the 1920s and 1930s when the United States outlawed alcoholic beverages, or think about the not legal pharmaceuticals that you can get from your local street dealer. When you cannot get something legally, you have to get it illegally, and that is always more expensive because of the smuggling and bribery costs. This to me is by far the most interesting case for crypto. If cryptos do become outlawed in some countries, we may actually see a price increase in the asset because people may think that putting money in those illegal assets may be safer than keeping money in the local currency. I encourage you to check out this article from TechCrunch. It is an extremely interesting point of view on why some people in Latin America see Bitcoin as a safer asset than their local fiat currency. Again, not saying that this thesis will be correct, but it is an interesting thought that needs to be investigated further because it definitely is a possibility that I see happening that will actually benefit the price of cryptos. So with all that said, let's head on over to the trade charts to see if there's a level or two to buy Bitcoin, Ethereum, or Dogecoin if we want to buy Bitcoin, Ethereum, or Dogecoin. So we'll go through Bitcoin's charts first, and then Ether, and then Dogecoin. And in Bitcoin, we can see that we are incredibly volatile, as expected, but this move today from lows to highs was about 25%-ish. Again, it is the first day of a major sell-off, so we definitely could hit this $30,000 level again. If you look back here, this was actually a support level that we have held back in January from the bottoms of these candles over here. So I think the $30,000 level would be the first place where I'd be looking if I wanted to add to my position in Bitcoin. But again, this is the first day of a major sell-off. We could definitely blow by this $30,000 level with momentum downwards. So because of that, I am not unloading all of my cash that I have allocated for Bitcoin at the $30,000 level. I'd be inching my way in, maybe buying 25% of my position I want at a time to either average up if Bitcoin bounces up from the $30,000 level and consolidates between the $40,000 and $45,000 level up here, or if Bitcoin breaks through the $30,000 level back downwards and consolidates between the $20,000 to $30,000 level. But again, the reason why I like cryptos long term is because of the bull cases that I talked about earlier in the video. There are definitely risks, there are huge risks actually, that cryptos could be worthless or at least dead money for a few years. For me, after weighing the bull case and bear case carefully, and because I'm young and only investing in crypto with money that I'm okay with losing, that is why I'm still buying the dip and willing to take on that risk. You need to do your own research to decide if the reward is worth the risk here. So after talking about Bitcoin, now let's talk quickly about Ethereum. Again, as you can see in Ether's charts here, very volatile and very risky. Again, the first place where I look to pick up some Ether is around the $2,000 level up here. We can see that this was actually a pretty strong support and resistance level made from the bottoms of these candles over here, as well as the tops of these candles over here. Again, I'd be probably buying about 25% or less of my position at the $2,000 level and average either up or down depending on which way Ether goes, because there's no way to know which way Ether goes. But again, if we break this $2,000 level here, then we could definitely consolidate in this range between $1,300 and $2,000. Again, always weigh the pros and cons and come to your own conclusions here, but actually I think Ether is one of the more interesting ones of the three that we're talking about. The reason for this is because of the NFTs aspect. So after talking about Bitcoin and Ether, now let's talk about Dogecoin. Lastly is the Doge here, and of course, volatile and very risky. We can see we dropped down to the 20-cent level down here at the lows of the day, and again, if I wanted to pick up some Doge, then that would be the first place that I would be looking, because if we look, this reversal here was a place where buyers stepped in. Buyers had said around here was where the price of Doge was either too cheap or fair value. We can see again a support level made from the bottoms of these candles over here, and look, it's right around the 20-cent level where our candle bottomed out. However, again, first day of a major sell-off. So if we break this 20-cent level, then we could definitely fall all the way back down to the 15-cent level or the bottom of this candle over here, or even further down where we broke out from in the 7-cent level range. Again, I think the main takeaway here is to not unload all the cash bookmarked for a specific stock or crypto at a certain level. Dollar price averaging is always a good idea, whether you are investing in Dogecoin, Bitcoin, or the S&P 500 index fund. But again, these cryptos are much more riskier than the S&P 500. Be sure to think carefully and be sure to fully understand the risks before you commit cash. For me, I'm only playing with the money that I don't mind losing in the crypto space here. Most of my money is kept in quote-unquote safer funds like the S&P 500 funds or safer stocks like Amazon. And I am definitely not planning to pour all my money into Bitcoin or Dogecoin, but I would like to have a little bit of exposure. As always, more risk comes with more potential reward, but also more potential for losses.